Hi everyone, in this video we are going to learn about understanding AML typologies is one of the most important skills for an AML analyst. Let's start. Many suspicious transactions look completely normal when viewed individually. The real risk becomes visible only when analysts identify transaction patterns, behavior of the customers, movements of the fund, and intent behind the activities. So these are the some key pointers. With the help of these pointers, analysts identify suspicious transactions of the client. I created these visual guides covering some of the most common AML typologies analysts encounter during the transaction monitoring and investigation. First is structuring, second layering, third is money mule account activities, fourth is funnel account, fifth is circular transactions, sixth is sell companies activities, seventh is trade based money laundering, and eighth one is wallet and crypto layering. So these are the some common typologies analysts need to identify when they are doing transaction monitoring and investigation. So we will see these topics in a very brief way in the next step. Let's see. One of the biggest AML lessons, a transaction alone rarely tells the full story. Strong AML analysis come from comparing profile and activity. When analysts compare the client KYC profile and his transaction activity, then they can identify it is suspicious or it's a genuine transaction history. Second is identifying hidden patterns. So if we see the single transaction or individually, those transaction looks very good, there was no any suspicious, but if we are analysis all the transaction history, then we can identify the hidden patterns, maybe a structuring, maybe a smurfing, maybe money mule account, depends on the case or transactions scenarios. Third is understanding funds movements. We need to identify from where customer getting money and that money where it flows. So it's a very important for the transaction monitoring field. Now next is assessing risk logically. So as per the transaction history, as per the client profile, we need to assess risk logically on the basis of the information of the clients. This infographic is especially useful for AML beginners, compliance professionals, interview preparation, and transaction monitoring learner who wants to learn transaction monitoring or who wants to create a career in transaction monitoring process. This video will be very helpful for all these peoples. Now let's see common AML typologies, and these methods used to launder illicit funds. For example, first one is a structuring or a smurfing. So in this process, criminal gain money from the illegal way. For example, 9,50,000, and large amount is broken into the smaller transaction to avoid the reporting. So what this person is doing, they are breaking that large amount into the smaller amounts below the threshold, that is 9,900, and he is depositing that amount into the different bank accounts, or on different date he is depositing that amount, so no one can identify it is suspicious or it is the illegal funds. So what are the red flags? Repeated small cash deposit, similar amounts, consecutive date, and same branch or CDM uses. Let's talk about the second one, that is layering. So once criminal gains illicit money, that money he is used to uh, deposit into the different account to hide the origin of that money, and after then once he is converted that illegal money into the legal money, he can withdraw that money as a cash. So what are the red flags in this process? Immediate transfer the money from one account to the another account. Second is circular movements, from suppose from A, bank A to B, B to C, and C to again A. So it is like movement of money into the circular form. And third red flag is multiple intermediaries accounts. As you can see in this example, this person deposited his money into the bank A, and after then that money moves from bank A to bank B and bank C. So bank B and C are the intermediaries here. And next red flag is split transactions. So these are the red flags in the layering. Third is money mule account activity. So when a criminal gain money from the illegal way, a person allows their accounts to be used to move funds on behalf of the others. Like it is a third party transfer, and if you see in the, so mule account is already open in the bank and then outgoing transfer. So what are the red flags in money mule account? Is first, third party inflows. Second is minimal balance retention, and third one is the quick outward transfers, and fifth one is profile mismatch. Let's see about the funnel account. So funnel account is like cash deposited from multiple location into the one account, and once that money is converted into the legal money, after then that individual person is withdraw that money. So what are the red flags in funnel accounts? Deposits from the multiple location and centralized withdrawals, geographic spreads, no clear business purpose. So these are the some common typologies. Next is fifth one, circular transaction. I already explained you in the first point. Any person deposited money into the bank A, and then they move that money into the bank B, and bank B moved to the bank C, and after then from bank C to again that money is moved to the bank A. So it is called a circular transaction. Funds eventually returns to the original accounts or entities. So what are the red flags for this circular transaction? First is repeated counterparties, no real business purpose, return of the funds, and circular movements. Let's see about the shell companies activities. So shell companies are the fake or inactive companies used to move fund from for example, company A is a real company, and this company is move fund to the shell company. There is no any real operation, and after then that companies move fund to the beneficiary account. So what are the red flags in this shell company activity? No real business presence, high value transfer, weak documentation, and complex ownership structures. Seventh one is the trade-based money laundering. So in this process, trade transactions are manipulated to the move value across the borders. For example, exporter export their products, goods and services to the another country, and he is making invoices or bill over or under the value, and then he is doing payment to the bank to the importer. So this is called trade based money laundering. Let's see the red flags related to this trade based money laundering. That is over or under invoicing, unusual trade routes, mismatch in goods and payments, and high risk countries. Next one is wallet and crypto layering. So funds moves to the multiple wallets or crypto platforms to obscure the trails, or hide the origin of that money. Suppose an individual, he is moving money from one wallet to another, and another wallet to the crypto exchange, and after that he convert that money into the cash. So let's see what are the red flags for this. Repeated wallet loads, multiple wallets movements, rapid conversion, and crypto exchange transfer. So these are the some important AML typology everyone need to know, especially for who wants to make their career into the transaction monitoring process. This will be very helpful for them. Patterns indicate intention. Always analyze the activity in the context of the customer profile, source of funds, and business purpose. So ML is about understanding the behavior, not just a transaction. Thank you so much. Please share these videos with your friends, family members, and with your colleague who want to make their career into the banking sector or in AML KYC transaction monitoring process. This video will be very helpful for all those people. So like and share with your all friends. Thank you so much.